Welcome back to episode 27 of the $10,000 SOXL challenge. Friends, we made no trades today. You might ask, why stay on the sidelines when the market seems to present opportunities? That's the core of today's review. In a divergent market, discipline is our first line of defense. Sometimes, the best trade is no trade at all. Today's market landscape: a surface-level harmony between indices and sectors. After Monday's big rally and Tuesday's pullback, Wednesday's, August 6th, market was anything but calm, staging a song of ice and fire. On one hand, the Nasdaq, led by tech giants, showed strong performance, pushing the broader market higher and creating a seemingly optimistic mood. On the other hand, not all sectors were celebrating. The market's internal divergence was very clear, especially in the areas we closely monitor. Trading volume remained active, indicating that the bulls and bears hadn't called a truce but were instead fighting fiercely on different battlegrounds. QQQ versus SOXL. Why we chose to watch from the sidelines? QQQ. The tech bellwether, strong rally, bulls in control. As a proxy for large-cap tech stocks, QQQ had a very strong session today, trending up throughout the day and closing with a significant gain, plus 1.26%. This clearly shows that market capital is still chasing big tech, with the bulls firmly in control. SOXL, the semiconductor spearhead, intense volatility, a risk signal. However, in sharp contrast to QQQ's strength, the performance of our challenge's protagonist, SOXL, was far more complex. Although it ultimately closed down for the day compared to the previous session, minus 2.16%, its intraday movement was not a one-way slide. SOXL dipped after the open but then staged a rebound, with its closing price even ending up higher than its opening price. This intense intraday volatility, contrasted with the broader market's steady climb, exposed the uncertainty and significant underlying risk within the semiconductor sector. What did we learn? Imagine if we had impulsively bought SOXL just by looking at QQQ's strength. What would have been the result? We would not only have fallen into the market's divergence trap but could also have been whipsawed by SOXL's wild intraday swings, leading to unnecessary losses. A day like today, where a major index rallies strongly while a key sector experiences high volatility without a clear direction, is the ultimate test of a trader's discipline. Those seemingly opportune intraday bounces are very likely traps designed to lure us into making a mistake. Conclusion and account status. Today's account balance: $10,286.96, unchanged. Therefore, our decision today to remain patient and avoid risk was absolutely correct. While our account didn't see any gains, more importantly, we avoided unnecessary losses from contradictory and complex market signals. Protecting our capital and staying on the sidelines when things are unclear and highly volatile is a victory in itself. For our long-term goal in the $10,000 SOXL challenge, successfully sidestepping a trading day filled with this much uncertainty is far more important than trying to catch one ambiguous opportunity. Let's stay focused and patient. We'll be back to fight another day.